Good afternoon, everybody. This is Hunter Mozingo bringing you your daily market insight video here on Monday, March the 14th, 10 minutes after market close here, 4:10 p.m. Eastern time. And today we had a big move in interest rates, actually a little bit of a breakout, if you call it that. And we're going to talk about what that means for stocks and what that has already meant for stocks so far this year. So we're going to look at risk on / the growth area as well as the value area and how this pretty swift and vicious move upwards in interest rates is impacting stock prices. So we're going to get to that in just a moment. But before we do, let's go into what just happened. So initial strength fades and important lows broken. We're going to talk about this a little bit more, but the Qs went back and went below their 224 lows today, although it was brief, but they did break that low. Like I said, the initial strength faded. We had an initial move higher in the after-hour session yesterday evening, but that, as you can see, ended up not being the case by the end of the day. So let's go through the performance here. G6 down nearly 3% at 2.71. Pretty nasty day for a lot of growth stocks. We're going to look at that in a moment too. S&P down about 0.75%. Qs down about 2%. The Dow actually ended the day exactly flat. Mid caps down a little less than 1%. Russell down a little less than 2%. 60-40 down 0.73 and grow down 0.55 today. So the moral of the story here is obviously technology taking a beating, but we also saw some areas that had recently been strong also get hurt today. So we're going to look at that, talk a little bit more about that once I get to the tail of the tape. But before we do that, let's talk about the market state and the trend gauge. And it'll be quick because there is no changes to either. We are still in correction. And we have no changes to the trend gauge, all still in bearish, nothing to make us change that at the current juncture. All right, so before we get to the charts and the tail of the tape, quickly I will highlight Revere. This is me. If you got any questions, send me an email, hunter@revereasset.com. If you're interested in our approach, what we do, want to know more about it, please send me an email, Dan at Revere Asset an email, Tim, Merrill, or Don at Revere Asset an email. We'll happily answer any questions that you may have. So let's go to the tail of the tape. So headwinds continue to be the same here. US dollar, inflation, Fed tapering, interest rates, a big one in the spotlight today, and obviously the Russia and Ukraine stuff that continues to be a big headline and fear grabber, as you would expect. So all of this still in play. The headline risk and event risk is still extremely elevated, obviously given the geopolitical conditions. So all of these continue to remain headwinds here for the market. Sentiment-wise, put calls still staying right here around this 1 area. 0.9 to 1 has been pretty much where this has lived for the better part of 2022, more or less since about mid-January. We've been staying here above 0.9 up to 1.1-ish range. So no real significant change there. VIX up slightly today to about 32, and fear greed more or less the same at 15, still extreme fear. So we go over this every time, but bull case, that rally has failed. We did not reclaim the key moving averages. And then breaking back below the 200, we've been living under it for some time, as you can see, for the better part of a month now. So news-wise, China COVID lockdown, Iran bombs, US Iraq, Russia asked China for help allegedly with their Ukrainian invasion. So a lot going on over the weekend. Like I said, the headline risk and event risk still very much prevalent. And as you can see by the news, a lot of stuff swirling around as we come into the market open this morning. So what we were watching this morning, what would S&P do if it could make it up to that 4290 resistance? Never was quite able to challenge it, just could not get up, couldn't muster the strength to quite get there. Fell a little bit short, almost about 30 points short, 40 points short today. So action-wise, like I said, the initial move was higher in the pre-market and after-hours trading. We opened up just slightly green, ran into this declining 8, which I talk about often. We'll look at that on the Qs. It was an area of resistance for a number of the indices today. Trend down, close near the lows is the rest of the action. So we did closed a tiny bit higher off the lows, but not by much. Notes wise, the range overnight 4209 to 4254. The 10-year yield, as I mentioned, breaking out, and then QQQ breaking 224 lows. So really, this is the big headlines today as far as price and market goes. big move in the interest rates, QQQ, the first between itself and S&P to break those 224 lows, and the first of the major 5 indices. Bottom line, even the strongest relative strength stocks can get clawed by the bear, and I'm going to go into that a little bit more. As we saw, oil stocks hit hard today, gold miners, other metals and mining stocks, a lot of the areas that have been really strong having some really nasty down days today, along with the rest of the market. Went over this, opened up 1/4%, closed down 0.75%. That's supposed to say 0.4. I apologize. Let me fix that. Or 0.74. G6 down nearly 3. 60/40 down 0.73. Grow down 0.55. Portfolio wise, we did make some sells today. We reduced our beta by about half with these sells. So we sold FCX as it broke below the 21. We sold Ulta as it broke back below its moving averages, and we sold PanW today. Sector wise, not much positive to choose from, but we did see KBE and XLF having a little bit of life with the interest rates move, and then we saw healthcare sector also having a good day. Bonds, oils, gold, silver, and miners all having a rough day. Obviously, metals and mining, like I said, uranium and solar really getting taken to the woodshed today after showing some strength over the last couple of weeks. So where did we close today? 41.73. First hour strength quickly fades, and we close near the lows. Like Don mentioned, we could not get back up to 42.90. And this is the S&P over here on the left side of my screen. It's the SPY, not the SPX. So that's why it's in the 400s, not the 4,000. So we'll go to the S&P in just a second here. But closed at 41.73. Losing this 4,200 level is not ideal. That's not what you want to see. And as you can see here, here are the potential areas of maybe support down here below. 41.115, the 224 shakeout low. And then you're starting to have to reach back farther. May of 2021, pullback support near 40.57. March of 2021, that's your breakout pivot 39.84. And then S&P 38.55 is what takes you to a bear market, minus 20% from the highs. So let's actually look here at the S&P on a chart, and let's put some context to it. So just a nasty move down, and this pink line, as you can see right here, is the 8 EMA, and that's pretty much where we topped today to a T. So that is 42.42, and the high of the day was 42.47. So unable to get over that 8 EMA and right below this 4,200 level. So you can see we've only had 2 closes below 4,200 since last summer. So this is now the second close below 4,200. Last Tuesday was the one prior. If these lows don't hold here, it does not look pretty in regards to the fact that it's highly likely that this 41.14 low will be visited if they're in some kind of turnaround. The trend certainly seems to continue to the downside for the time being. Go to QQQ quickly here. As I mentioned, it looks worse. It actually did break its 224 lows already. Losing this 320 level was a big deal. It tried to fight there for a little while today, but not necessarily able to do it. And we also saw more of big tech distribution. My video from last Thursday talks about this in a little bit more detail. You can go check that out if you're interested. But some of that really impacting the indices, and specifically the QQQ today. DIA, like I said, finished roughly flat today, but acting better than the indices. As you can see, or the other indices, excuse me, the Qs and even the S&P as of recent, has not broken last Tuesday's low, and also is not really all that close to the 224 low. Mid caps, similar story to the Dow, have not broken their Tuesday low, still above these lows here. So you can see Qs are acting the weakest, and we even see the mid caps and the small caps have angled up recently. But IWM really was dragged down today by oils. Just a nasty day for the oils market, which obviously impacts the Russell 2000 pretty significantly. So Russell 2000, very similar to all the other charts we looked at, the S&P, mid caps, Dow rejected more or less at the 8 EMA today, unable to get over it or close above it by any means. So before we move into some stock charts, I want to show a chart here of the 10-year yield. I mentioned a big move in rates, so let's talk about it. And this is what I mean here. So we had this move up to, this is 2% here if you're looking at this chart. I know it doesn't look that way, but think of it as this is 2%, This is 1.765% here. So we had a big move for rates over 2% today after running up and shaking out initially when we got to that 2% level. So a really strong move for rates. And what we want to look at here is what has this meant for stocks. So you can see this move really kind of started here at the beginning of the year. And as we well know, it's been a bad start to the year for most everything, but particularly for growth stocks, for the NASDAQ, for technology. So what we're going to do is we're going to look at these charts. We're going to look at the TNX year to date, the 10-year note up 41%, and we're going to throw QQQ up there year to date, which is down 20%. So you can see the correlation is very obvious here. They are not working together. These two are working against each other, and we'll show you some more risk on type of sectors / big components of the market. So here's your semiconductor ETF right there with the Qs. Here's your software ETF right there with the Qs. So these risk on type of areas are not happy, for lack of a better term, about what's going on in rates. And I'll show you a few more here just to add some color. IWO, that's your Russell 2000 growth. And then let's look at SPYG, that's your S&P 500 growth ETF. So all of these down a pretty significant amount, but we're not seeing the same weakness in the value stocks. And we know that we've seen oil be much stronger this year, a lot of the commodities and the more value-oriented names. But as you can see, SPYV, obviously much, much better than all of these down here and better than the S&P itself, which is down about 12.5% year to date. We'll also look at IWN, which is the value ETF for small caps, also much better. So the correlation, the point I want to make is this move up in rates has been very bad for risk on growth assets. Has not been so bad for your traditional value type of names. So obviously this group right here far underperforming this group. And I just wanted to point that out to you guys. What does that mean for stocks? It means that the risk on stuff, the high beta stuff, the technology stuff is coming under pressure more so than really anything else at the moment. So let's move to charts here of individual stocks. And we'll go through the positive ones first. And the ones that acted well today, because there's not a ton of them. So you got FMC, we talked about this last week, in that chem ag space, continuing its really positive action. PWR, a name we've talked about in the past, making a big time recovery after earnings, right back up here to 52-week highs at least, and very near this 124 pivot, as you can see there. BRTX, Vertex Pharmaceuticals, also some nice relative strength today, up 2.2% versus a very crappy market. ZIM acting much better than its counterpart, which we're going to look at here in a second. But ZIM, really nice action today, up 4%, almost 5%, really was showing nice RS all day long. Excuse me there. ABBV, another name showing really nice action here, just trending nicely upwards, kind of respecting this 8-day, but certainly respecting the 21 and 8 together, as you can see. But ABBV having a nice day. Another healthcare company having a good day. Regeneron up about 2% or so. And lastly here, UNH also a little bit of relative strength here, up about 1%. MOH, another healthcare company, Molina Healthcare, was showing some strength, but the reason I bring this up is this RS line blue dot. It faded as the day went on, but those were two names that had RS line blue dots today, MOH and UNH. And then lastly, I mentioned the bank and finance ETFs. Those reversed off their highs as well, but still slightly green. Here's your bank ETF up about 0.5%, and the financial sector XLF ETF up about 1.2. So still benefiting from this big move up in rates, although they did get back a lot of their initial gain. So moving to the bad, which there was plenty of. Solar stocks, which had recently been acting pretty well, although they are very volatile. They had some big volume come in, strong moves, down about 6% today on the ETF. Sedge and Enphase down a significant amount more. Well, I say that they were. Sedge down 6.1%, Enphase, excuse me, down about 8%. So just all around, not necessarily the action you want to see here out of this group. I mean, that's two really brutal candles back to back for both of those names. Big tech, I mentioned the distribution. I'm going to quickly just fly through these. Tesla down 3.6%. NVIDIA down about 3%, if I'm not mistaken, 3.5%. Apple also underperforming against the S&P today, down about 2.5%. That's that big tech distribution I mentioned. It looks like we're seeing it a little bit more now. Sector-wise, we had XOP, the oils. I talked about those having a rough day. This sector was down 6% at the lows today, finished down about 4.5%. And then XME, the metals and mining ETF, also a really nasty day, down 6%. So some of these, the strongest areas, really taking it on the chin, shaking out some people today. Now I'm going to run through some more names that have had some nasty moves, and it's not just growth stocks here, but some of these are. So here's Bill, was hanging in there as one of the better looking growth stocks, but as you can see, down 8% today, not having a good day. Upstart had a strong move following earnings, but has completely given back that entire move, down 10% today. Docs, a name that was also acting well after an earnings gap up, down 12% today. So we're seeing a lot of really sharp, nasty moves in individual stocks, and not just growth stocks. And this is what I mean. Here's SBLK, which is a shipping company just like ZIM, but today down over 10%. So this is just one of those situations where you've got extreme divergence between the two leaders. ZIM up 5%, SBLK down 10% today. DVN, another former leading oil name, I guess still leading oil name, but down over 10% today. So this is what I mean, or what we meant by the bottom line. Even the strongest RS stocks, RS 99, can get clawed by the bear, down 10% right here to the 50-day. So really some strong moves to the downside in oil today. A big move down in the price of crude over the last couple of days as well. And then real quick, we'll go through what we sold today. FCX, I mentioned breaking below the 21, got out of that today. Ulta, breaking back below those moving averages. And then lastly, PanW, relatively similar in regards to breaking back below that 21. So those were the three names that we exited today, and that is going to wrap up the video. So please send me an email if you have any questions, and I will see you guys on this Thursday's video and the podcast. So have a great week, everybody.